All right, before we even talk about entries or setups, let's start with the big picture. Every single day in the market has one story, one narrative, and that story is either a continuation of the previous day, a reversal against it, or a breakout into something new. Now, if you haven't watched my daily bias video, I will advise you to check that out with the first link in the description, because that's the foundation of all this. Without understanding the bias, the intraday narrative won't be clear. Now, the way we track that story is by using three simple anchors. The previous day's high, the previous day's low, and the equilibrium. That's just the midpoint. And once you understand how price reacts around these three levels, the whole day starts to make sense. And that's where your anticipatory ideas come to life. And here's the thing. As a New York session trader, we are not just looking at the daily bias in isolation. We'll be studying how Asia and London built their ranges, and then use that relationship to anticipate what New York is likely to do. So in this breakdown, I'm going to walk you through the intraday narrative, how to use the daily framework to build bias, and how I classify New York into three profiles, which are continuation, reversal, and breakout. And then how it all ties back to execution, which we will go through in the next video. So check out this PDF example. These are all bullish examples, but the same applies to bearish scenarios as well. You just have to flip everything I say for the bearish case. If we are anticipating a bullish day, it's either gonna build up in one of these three scenarios. First is continuation. We expect price to respect the equilibrium or the upper half of previous day's range. In this case, the wick forms inside the previous day's PD array around the EQ. And if we zoom into the intraday time frame, and for me that's the hourly chart, any PD array we meet around the equilibrium or the upper half should help push price higher. This PD array could be an FEG, an old low, or an order block. I would advise you to stick to only those three PD array. That's where the low, also known as the wick, would form. And that low could form in Asia, London, or New York. Our job is to identify which section created the low, and from there we can anticipate what's next to trade the bullish continuation. The second is the reversal. Here, we expect the low to form below the previous day's low if we are anticipating bullish, and that's usually because we are opening near the previous day's low after a bearish close. So we expect today to open, trade lower by sweeping the low, and then reverse bullish. Again, the wick, that is the low of the day, can form in Asia, London, or New York. And that's your clue of what to do next. And the third is the expansion or the breakout. This is similar to the case where we expect price to trade lower and sweep the previous day's low. But this time, price does not have time to go lower. Instead, it just starts expanding to the upside. In this case, we lean heavily on the intraday or previous sessions story to decide if the low is protected, so we can focus on trading to the upside and expect not to come back to the previous day's low. Now, if you open your chart and go check this out, you realize every bullish candle forms in one of these three scenarios. Your job is to figure out which one is playing out and then use the intraday chart to decide how you will approach the narrative the market is telling. Now, let's talk about the intraday narrative itself. The intraday narrative defines how the daily bias plays out within the New York session. It tells us if NY is likely to reverse, continue, or break out based on where Asia and London set their highs or lows. C. The daily bias tells us whether today should continue or reverse yesterday's move. But the intraday narrative explains how that actually plays out inside the sessions. And as a New York trader, we classify this into three profiles. New York continuation. This is when the low or high of the day is already set in Asia or London. We then expect New York to respect that low or high and continue in the same direction as the bias. The New York reversal is when Asia or London does not really do much, either consolidating or moving one-sided. Then NY open ups, set the real low or high of the day, and reverses in our direction. And the New York breakout is a case where the Asia and London does not set any relevant high or low or reach important levels. And we expect New York to come in to put in the high or low, but instead, it just keeps expanding in the same direction as the earlier section. That's when it qualifies as a breakout. We'll go through chart examples of these three profiles in the next slides. Now, where should we expect these profiles to form? Mainly around three anchors, the previous day high or low. If we are anticipating bullish, we expect setup to form around the previous day's low, especially if we open near it after a bearish close. And if you are bearish, then around the previous day's high, especially if yesterday closed bullish. The previous day equilibrium. If yesterday closed strong and we expect continuation, then today should respect yesterday EQ and continue in the same direction. Previous sessions or Asia and London highs and lows. This level matters especially for breakout profiles, continuations or reversals. Now let's talk about timing. As an indices and commodities trader, I use 6 p.m. Eastern Standard Time as the new daily open and 8 to 8:30 a.m. Eastern Standard Time as the New York opening price. For Forex, it's slightly different. It's 5 p.m. Eastern Standard Time for the daily open and 7 a.m. Eastern Standard Time for New York open. Now, what this does is set the reference point. If it's a bullish day, we expect price to trade below the open first to set the low. And if it's bearish, we expect it to trade above the opening first to set the high. So now that you understand how the intraday narrative works, the story behind it, how, where, and when you should expect it to form, let's get into some PDF examples for more clarification. So when next you open your intraday chart, you will know and understand what step the market is likely to play, how you can work your way through and follow up with it. In this first example, we have a bullish continuation. Price trade lower below the opening price in Asia to set the low. That's the wick. Then reverses higher. That low could form around the previous day's equilibrium or previous day low. And by the time New York opens, if the low is already set, we expect continuation higher until our daily objective is met. And to the right, we see the low of the day form in the London session, which again in this case, we anticipate New York to continue the trend to the upside until our daily objective is met. Here, Asia and London consolidate around the opening price without setting a proper low. New York opens, drives lower into an important levels or PDRA, then sharply reverses higher. This means New York carried the load of setting the low before the bullish move. And again to the right, we have similar conditions. Asia and London drives away from or below the opening price without reaching any relevant levels. We will anticipate New York to set the low and then trade higher. And here is the breakout profile, which in this case, Asia and London does not set a relevant low. Instead, it consolidates. Then New York's look like it might manipulate the consolidation, but instead it just breaks out above the previous session and continues expanding higher. In this case, we would expect the consolidation low to stay protected and not to be traded back into. And also, sometimes the expansion even begins early in Asia or London without any real low of the day. And coming into New York, we expect the expansion to continue higher without price returning to set a deeper low. This gives clue that the market does not have enough time to create the low. Now, I want you to know that it won't always look clean, but once you understand which narrative is likely to play and you see it aligning with your bias, that's your opportunity to act. And you won't get it right every single day, but backtesting this and collecting data will build your confidence. You will realize one of these three profiles always play out, and that's how you find your opportunity. Remember, the intraday narrative is the bridge between the daily bias, which is the foundation, and the execution, which is your entries. In the next video, We will break down executions and entry models, and I will show you how everything connects together. So that is for this video. Watch it again if it doesn't click at first and go through some examples. The more you spend on it, the more it clicks. And if you found this video helpful, don't forget to like so more traders can see it. Subscribe for more educational content and drop a comment with your thoughts or question. I will gladly respond. The PDF for this video is in my Telegram group. It's free, and I also share some of my trading thoughts there using this same model. Check it out if you want. The link is in the description. And lastly, I've linked the broker I personally use down below. It's an affiliate link, but if you are looking for a reliable broker, feel free to check it out. So that will be all. Trade safe, and I will see you in the next one.